Hey there, everybody. Welcome back to our weekly market insight series brought to you by the Capital Markets Trading Desk here at SunWest Mortgage Company. I've got a lot of news for you today, so let's get to it. It was an up and down holiday week for markets. The 10-year Treasury yield crept up over the 4% threshold as the latest economic data signaled strength in the economy, easing lingering fears of a potential recession. On Wall Street, the earnings season continues, with many banks beating expectations while stocks reversing earlier losses as chip makers' stocks staged a comeback. The New York Fed's Empire State Manufacturing Index declined by 23.4 points for a final 11.9 reading, weaker than forecasts. Readings below zero indicate contraction. New orders plunged nearly 20 points to 10.2, while the index of shipments tumbled almost 21 points to 2.7. The results of the survey may have been slightly weighed down by the brief port strike and bad weather. Amid a jump in rates, MBA mortgage applications suffered their biggest drop since 2020 after plunging 17% during the week ending October 11th. This follows a 5.1 decrease in overall activity in the week ending October 4th. The average mortgage rate climbed for a third straight week to 6.5%. Purchase activity dropped 7% from the previous week, but was 7% higher year to year. The refinance index sank 26% week to week, but was still up by 111% compared to the same week last year. The Labor Department reported that import prices slid 0.4% in September, primarily due to a 7.1% drop in oil prices. The figures were slightly below the 0.3% decrease forecast and followed a 0.2% drop in August. Core import prices, which exclude petroleum prices, rose 0.2%. Export prices fell 0.7% during the month after slipping 0.9% in August. According to the U.S. Census Bureau, retail sales increased by 0.4% in September, up from the unrevised 0.1% gain in August and better than the 0.3% forecast. Excluding autos, sales accelerated 0.5% after advancing 0.2% in August. Applications for U.S. unemployment benefits unexpectedly decreased by 19,000 to 241,000 for the week ending October 12th after rising the week before. Median forecast called for 259,000 applications. Continuing jobless claims increased by 9,000 to 1.86 million for the week ending October 5th. Home builder confidence moved higher as inflation eases and interest rates fall. The National Association of Home Builders Housing Market Index beat expectations and rose to 43 in October from 41 in September. Economists had expected the index to rise to 42. Even so, the index continues to fall short of the 50-point benchmark that separates positive from negative builder sentiment. In international news, the European Central Bank cut interest rates for the third time this year, pointing out that inflation is under control. The central bank lowered the deposit rate by 25 basis points to 3.2%. It was the first back-to-back rate cut in 13 years as Eurozone prices cooled to 1.8% in September. Canada's annual inflation rate slowed more than expected to 1.6% in September. This was the weakest inflation rate since February 2021. The sharp drop has economists expecting a half a percentage point rate cut when the Bank of Canada makes its next interest rate announcement on October 23rd. Well, that's it for this week. If you like this video, please hit that like button, and to be notified every time we upload a new video, please subscribe. Your support to our channel is greatly appreciated. Stay updated with our news, and our trading desk will keep you informed with our pricing incentives. Have a fantastic Friday, everybody, and Buffy out.